Good afternoon and welcome to the Westpac Share Trading webinar on accessing US stocks without a global markets account. My name is Peter Roach. I'm the National Manager for Westpac Share Trading. With me today, I have Daryl Bow, Product Manager for Westpac Share Trading, Chris Bagley, Director from Deutsche Bank, and Brian Richmond, who's Business Development Executive for Chi-X. Although there are several ways that you can access international markets without a dedicated global markets account, including through ETFs and unlisted managed funds, today we'll be discussing traces which are offered by Deutsche Bank through Chi-X. If you have any questions throughout the presentation, please lodge them through the question function and we will try and answer them at the end. If we run short of time, we'll answer any outstanding questions directly via email over the coming days. I'd now like to hand you over to Chris. So thanks, Chris.
Thank you, Peter, and to the Westpac team for this opportunity to discuss investing in international equities via traces. Firstly, look, I wish to send my very best wishes to everyone on the call and your families during what has been an incredibly difficult 2020. Hopefully today we can pick out some bright spots and investment opportunities for a more hopeful future. As Peter mentioned, we're going to talk about traces, which is a depository receipt traded here in Australia, providing us access to the biggest companies in the world like Apple and Microsoft and McDonald's, to name a few. But first I'd like to set the scene in terms of why we should consider investing in international equities, why investing in single stocks is an important part of portfolio diversification, the challenges of investing internationally, and the convenient, cost-effective solution that Traces presents to Aussie investors. Like a lot of people, we're all working from home, so please forgive internet broadband and computers and the like as we go through this presentation. Within the disclaimer of this presentation, it is just worth noting that the information contained here doesn't constitute advice or an invitation to purchase or trade traces. So look to the first slide. I wanted to draw everyone's attention to our propensity to stick with what we know. The latest SMSF asset allocation data shows our strong bias towards Australian shares and other Aussie assets, which naturally means our exposure is concentrated towards the Australian economy. However, if you have a look at the right-hand side chart, it shows that Australia's equity market makes up just 2% relative to the rest of the world in terms of size. 2% compared to the US market, equity market, at 63%. So when you cast your eye back to that SMSF chart, why do we only invest about 1% in foreign shares when the US market is so big? And probably more importantly, are our portfolios truly diversified on that basis? So I'll get to those questions a little bit later on in the session. The next slide, I think, is very simple, but it's fascinating when comparing Australia to the US. In slide 2, what you'll see is that the top 5 US companies by market capitalisation simply dwarf the top 5 Australian companies. In fact, there's no comparison. But take a closer look. We've included the cash on the balance sheet of Apple, Microsoft, and Alphabet. They each hold more cash than the total market cap of the majority of our top companies. Now think about the defensive nature of having such a large cash position to protect these companies during a recession, which we're currently in. But more importantly, this cash balance provides a war chest for these, Goliath-type companies to capitalise on M&A and other growth opportunities as the market turns. This is simply something the Australian market sorely lacks. And if you go to the next slide, you'll see the result bear fruit with regard to their share price, the share market performance. What we have here is we've provided a comparison of all the tracer series that are currently available on the market. We've also then stripped out a basket of technology companies made available in traces, and we've compared it to the Australian market and Magellan's very popular Global Equities Fund. Now, as you can see, both on a one-year basis and year-to-date, investing in traces has yielded materially better returns. Now, to me, this demonstrates the strength of these US companies, right, in terms of brand and business models and their global reach, which drives superior earnings growth. It's worth then taking a closer look at the comparison with Magellan, which, to be fair, together with other ETFs, has been the best way to access global equities. Had you invested in a select few technology companies via traces at the beginning of this year, i.e. bought on the 1st of January, your portfolio would have been up 27%. Now, this is as at the end of May. Compare that to buying Magellan's Global Equities Fund, it would have been up just 2%. So this brings me to the point around the importance of single stock exposure. So to the next slide, I think this is fascinating. Australians are well known for investing in direct equities, right? We have a personal connection with our investments, whether it's our home or shares. For example, we shop at Woolworths. We know their products. We understand their business. We want to own the stock. But when you consider all the products we consume, you will notice very quickly on this slide, they are dominated by the major US companies. We know their products, understand their businesses, but why do we choose to gain exposure to them via structured products like ETFs? Well, the answer is easy. ETFs offer low-cost diversification without having to set up an international trading account. But you're not owning these companies. Rather, you have exposure to them via a particular index or maybe a sector. The other point to note is that ETFs and managed funds are off-the-shelf products, a one-size-fits-all approach. But each of you have different financial goals. You have different risk tolerances. So how can such products suit your exact circumstances? Now, I'm not saying we should ignore ETFs and managed funds. Actually, far from it. I think they provide a critical element of diversification, but they don't cater for all of your specific needs. That's where single stock exposure comes in. And this is the very strategy that, the Warren Buffetts and Charlie Mungers of the world, the Berkshire Hathaway empire, they've adopted for over half a century. And now in this very strange market that we find ourselves in, presents an opportune time to pick up a few great companies. As Charlie notes in one of his most popular quotes, you can buy a few great companies and then just sit on your backside, and that's a good thing. So to the next slide, recall we posed a couple of questions at the start. So why do we invest so little in direct offshore shares? And why do we default to ETFs and managed funds for global exposure? Well, the answer is pretty simple. It's difficult and expensive. Before you even get started, you have to open an international account, which involves lengthy paperwork and takes considerable time. The costs can be very expensive. International brokerage, for one, is higher than domestic brokerage. You get charged custody fees for holding the shares on your behalf in the US, and then there is the foreign exchange costs. I would recommend that you always read the financial services guides of your brokers and other online platforms. You'll be surprised to see just how expensive it is to transfer your Aussie dollars into US dollars and back again. Then think about the logistics. We're all asleep when the market is trading. So how do you know you got the best price? Or, in fact, if your trade's actually settled? And what about reporting? Think about the end of the financial year, which is approaching. All of a sudden, you need to report on your US dollar investments along with your Australian dollar investments. It adds an entirely new level of complexity to your reporting. We've also learned that often communication from the US company or the broker on corporate action-related events doesn't flow through automatically. I can understand why we choose to go to ETFs as the default option for international exposure. But now there is a solution, and it's called traces. So to the next slide, as mentioned at the start, traces is simply a depository receipt. In fact, the depository receipt was first created in the US in 1927. So that's right, this is over 90 years old, and it allows US investors like yourselves to buy foreign companies like CSL and BHP in the US. Today, there's over $2 trillion invested in depository receipts. So what we did was we took this depository receipt model and applied it to suit Australian regulatory standards. We've called it a tracer or transferable custody receipt. So now, a tracer, you can get single stock exposure to the largest US companies in the world, with the tracer trading during Australian market hours, all in Australian dollars. You can use your existing brokerage account to buy Apple, for instance. It settles T+2 in chess under your local broker HIN, just like your Westpac and Telstra shares. In terms of meeting the Australian regulatory standards, ASIC has classified tracers as a domestic equity security. It's not a structured product. It's not a derivative. If you own a tracer, then the ultimate beneficial ownership of that underlying share is yours. From a practical perspective, there are a number of benefits. As mentioned, you don't need to set up any other accounts. Just use your existing local brokerage account. You're only paying domestic brokerage and not the more expensive international brokerage. There is no FX charge when trading because you're investing in Aussie dollars, and dividends are all received in Aussie dollars. And again, think again about this end of financial year reporting. Whilst you're investing in Microsoft or Disney, you own these shares via a tracer, which is an Australian investment in Australian dollars. This dramatically simplifies your reporting. We've also addressed a couple of other pain points, specifically the pain point around access to information and disclosure. We are obligated to inform you of any corporate actions which will impact the tracer. What I mean by that, dividend notices, proxy voting, for example. As I alluded to on the previous slide, custodians and brokers often fail to pass on such information to investors that own international shares directly. Well, as I said, we're obligated to do so. We've also gone one step further and created a one-stop shop of all the information you could possibly require, and it's on tracers.com.au. It includes the company's regulatory filings, investor relations, website links, US dollar, Aussie dollar charts, and even consensus analyst recommendations. In fact, US investors in the US don't even have access to all of this information in one spot. So to the next slide, how do tracers work? So the US share on the very left-hand side, you see there, it trades on either the New York Stock Exchange or NASDAQ. That share is deposited into our custodian, which is Deutsche Bank New York. That's the next box along. Think of the custodian as a safe, right? Protecting those US shares on your behalf. Those shares are not held on Deutsche Bank's balance sheet. They're segregated from the other shares sitting in that safe and cannot be lent out. That share, which is yours, is therefore protected, and you can access that at any point in time. The issuer of tracers is Deutsche Access Investments Limited. That's me. I sit in the middle. Essentially, I hold the key to that safe and issue to you the tracer on a one-for-one basis. So one US share or one Apple share equals one Apple tracer. We are responsible for passing on all the beneficial entitlements that come from that underlying share. So information related to paying you dividends, allowing you the ability to vote, etc. On the very right-hand side, you'll see that the tracers are traded on Chi-X. I'll ask my colleague, Brian Richmond, to briefly discuss Chi-X. Brian.
Yeah, thanks, Chris, and afternoon all. So Chi-X has been around here in Australia for just over 8 years now. So we've nutted out about 20% market share. So what that means is seamlessly in the background, we're another execution platform for all the brokers to execute trades on. So about 1 in every $5 is actually executed on Chi-X versus the ASX. So we've got close to 50 participants, so a mixture of retail and institutional clients that do make up over 98% of the volume that's traded through on the daily market on any given day. And Tracers is one of these new products that we've brought out to, I suppose, distinguish ourselves a little bit and get some product out there to really get our name out there and make it a name for ourselves. So we're working closely with Deutsche. It's a good partnership we have with them, and we think the Tracers product really finds a niche for the Australian market to get exposure to these big US names.
Brilliant. Thank you, Brian. I always like to think of Chi-X as when you look at the US and you look at New York Stock Exchange and you see NASDAQ right there, they're kind of the two big exchanges. Well, it's not too dissimilar to what we've got here in the market now with Chi-X. In terms of liquidity, so the prices that you would see on Chi-X, so Traces has a market maker, which is exactly the same as how ETFs are priced. A market maker is there to help provide liquidity. So they have the US shares sitting in that custody account, and we issue them the Traces. So at 10 o'clock every morning, they will look at the US dollar closing price of each US company, factor in the current Aussie dollar US dollar FX rate, as well as what the futures contracts is predicting these US companies will do when the US market opens the next day. And then they will make an Aussie dollar buy price and an Aussie dollar sell price, which you'll be able to see in the screen. That bid and offer price is dynamic and will move during the day based on the demand and supply like any other share. The move in the FX rate will obviously happen over that day as well. And then there's market news that will impact the stocks in the US when they open the next day. The benefit here is that you can lock in your investment during our trading day at a known Aussie dollar price without having to wait for the US market to open the next day. So now to the next slide, let's talk about fees, which is an important aspect when considering an investment. So here we've provided a simple example comparing an investment of $10,000 in Apple, either directly or via a tracer. And we've just selected an online broking platform as the example. As I said, I'd recommend reading the financial services guides to really understand the costs that are involved. So let's first assume that we buy Apple directly. So firstly, we've had to set up our accounts and the like, and as I said, that takes a long time. But you'll notice the fees mount up pretty quickly. First, you charge 60 basis points in terms of an FX fee to convert your Aussie dollars into US dollars. This is before you even start trading. Then international brokerage, as mentioned before, it's more expensive than brokerage charge when buying Aussie securities. And then some custodians charge a holding fee, which all amount to a total cost of about $250. So it's $250 for a $10,000 investment and a holding period of 12 months. Now, let's compare this to owning $10,000 in Apple Traces. The cost, $80 versus $250. I'll say that again. The cost is $80 versus $250. So why is there such a big difference? Well, firstly, there's no FX charge. You're buying in Aussie dollars. You're buying an Aussie security. Second, the domestic brokerage is more than 50% cheaper. And then we have our service fee, which is taken from the dividend. Now, the service fee is calculated at 10 basis points on the value of the underlying share. So put simply, a $10,000 investment at 10 basis points equals $10. That's your service fee. Now, in this example, Apple pays a dividend 4 times per annum. Hence, the service fee totals $40. It's important to note that we cap that service fee such that it would never exceed more than 20% of the overall dividend. In fact, today the service fee is roughly about 10% of the dividends, kind of like where we like to see it sit. It's also worth noting that if you decided to buy Disney Traces, they pay similar to Australian companies. They pay twice a year. So instead of paying $40 for a service fee for a $10,000 investment in Disney, it's $20. Then what if you decided to invest in Amazon or Berkshire Hathaway? Well, they actually don't pay a dividend, so there is no service fee. The bottom line, irrespective of whether you purchase a tracer that doesn't pay a dividend or does, investing in traces is demonstrably cheaper than buying US shares directly. So how do you go and place an order? So to the next slide, I'll pass back to Brian to run through how to place an order in Berkshire Hathaway. Brian.
Yeah, great. So, I mean, you'll probably all notice this page. It's a page you're probably familiar with. You've used many times to buy or sell an order on your Westpac online account. You do a tracer here exactly the same way as you'd be buying Telstra or Westpac or CBA. All the codes for traces start with TCX, and then the final 3 letters are usually following the underlying security. So in this example, BRK, so TCX BRK is a Berkshire tracer. You put that in the code like you'd be putting in CBA, and then the process is exactly the same from there. You're buying how many quantity you want at the price you see, which is that Aussie dollar price that you see on the screen. So you'll see the market depth is down there on the bottom right-hand side, just like you had any other ordinary Australian equity in there. You can choose to place an at-market order and just hit the bid or the offer like you do an ordinary security, or you can rest in the book and put an order there for the day as well, and try and get hit at a price you're comfortable at trading at. And the same thing applies for if you're amending or cancelling as well. So it's the same process as if you're cancelling a Telstra or a BHP share. You'd be very familiar with that process. There's no different websites you need to go to. There's no different account you need to open with Westpac. You do this right now through your existing account without having to complete any extra forms or do any extra paperwork. It literally is that simple.
Excellent. Thanks, Brian. Look, so we're just about to wrap up, and we'll get to the last slide. Look, I want to thank everyone for your time today. Hopefully, we've kind of demonstrated that the US market is just simply too big to ignore. With exposure that you get to the new world economy, to sectors that are just simply underrepresented here in Australia. And so now you can gain access to all of these globally iconic brands and businesses via traces traded during Australian market hours. So with that, again, thank you for your time. I'll pass it back to you, Peter, and maybe in a position to field some questions.
Great, thanks, Chris. So I'll just check with Daryl to see whether any questions have come through at this stage.
Yes, we've got a few questions, Peter. So the first question we've received is from David. Where do I gain a list of ticker codes listed under Tracer?
Brian, would you like to field that one?
Yeah, I can answer that. So there's a few places. One would be that traces.com.au website that Chris mentioned on one of those previous slides. So traces, tracrs.com.au. That does have a list of all of them there. Alternatively, there is a web page on the Westpac website where you can view all the ticker codes there. And the third and final one is if you've actually got an Iris screen or you use Web Iris or Viewpoint through Westpac, you can put into a watch list. If you put in /CXA, as in Chai X Australia, TCX, which is the beginning of the tracer code, so /CXA TCX, that automatically pre-populates a watch list of all the tracer codes currently available, and also will automatically update any new tracer codes that come in, because we do have another issuance coming up shortly, and anytime there's new codes and new stocks in, that will automatically pre-populate there.
The next question we have is from Steve. Am I correct in assuming that trading is limited to Australian trading hours, i.e. 10 to 4 p.m, or can these be traded overnight?
Thanks, Steve. No, this is an Australian security. So just like Westpac shares, BHP shares, etc., when the market opens in Australia at 10 o'clock, that's when tracers begin trading, and they close at just a little bit after 4 o'clock, just like every other Australian security. So treated as such, and there's no, obviously it doesn't trade after hours or overnight.
The next question is from Akshay. Can the dividends be reinvested when we purchase a tracer?
That's a good question, Akshay. At this point in time, how dividends are treated is that once the custodian receives the cash proceeds, that we then convert that into Aussie dollars and pay that into your Aussie dollar bank account. So that's the current process at this point in time. There's no consideration at this level as to reinvesting it into the actual tracer, given the difficulties of administering corporate actions over different jurisdictions.
Okay, our next question is from Diane. What happens to US shares I have already bought through Westpac? Will they automatically transfer over to TCX?
Okay, good question, Diane. Look, there is this ability to transfer your shares into traces. It doesn't happen automatically. So obviously you're one of very few that have painstakingly gone through the process of setting up your accounts. On the Traces website, traces.com.au, there's an application form which you can access and download. Essentially what that would allow you to do is instruct Link Market Services, who's the registrar for Traces, to move the shares that you've got that currently sit in a different custodian in the US to Deutsche Bank New York, essentially my custodian. That instruction, once I receive those shares, I will then be able to issue you the equivalent traces. And once issued, then they'll sit under your local broker HIN. Link will charge a $40 fee for the effort of doing that conversion, but then that will seamlessly enable you to hold whatever US shares you've got in tracer form. It is also worth noting, and we worked extensively with the Australian Tax Office with this, that you moving the shares into our custody account and us creating the tracer, essentially what that means is you've moved it in terms of into a different trust. Technically, that would create a capital gains tax event. In this situation, with regard to traces, we have the waiver such that it doesn't create a capital gains tax event. The first point that you purchase those US shares remains at that point, which is a very important aspect that we needed to get sign off from the ATO. So that's the process. Go to traces.com.au. You'll see the application form, and if you fill that out, Link will do everything in the background to transfer the shares to us, and we'll issue you the tracer.
Chris, it's Peter here. I just want to clarify or just confirm that Westpac will still continue to offer our global markets account. So there will still be the ability to trade on the US markets through our global markets accounts. Traces is obviously just another alternative for ownership, which is a little less onerous on the administration side.
Okay, our next question is from Anne. Are all US stocks available?
Thanks, Anne. At the moment, we've got 30 US companies that are available, as referenced in the last slide that we presented. We are looking to roll out another 5 next week, and the 5 names we're looking at MasterCard. So that'll complement Visa. We're looking, for this thematic about online payments. We've got Walmart, so rounding out the retail and the online distribution platform to compete with Amazon. We are being, kind of a bit nimble and looking at the current thematic of work from home thematics. So we're actually bringing Zoom video communications to the market as a tracer. So we're quite excited about that, even though the stock has run quite considerably. And then we're looking at a couple of healthcare industrial names, Gilead Sciences, which has been in the press a lot, talking about vaccines, and 3M, who's been a big leader in terms of the PPE side, in terms of the equipment for the healthcare sector. But as we all know, 3M make all these Post-it notes and all the industrial stuff as well. So that's the 5 coming next week. So that's 35. We will look to release another 5 probably in September, so end up with about 40 US names by the end of the year. It is very much demand driven. We're not going to offer the whole entire S&P 500, but we will release names and launch names based on A, demand, as well as B, thematic. So Zoom being a perfect case in point.
Okay, we're just about out of time.
Thanks, Chris. Yeah, thanks, Daryl. We are running out of time. So what we will do is any questions that are outstanding, we will respond to personally via email over the next 24 hours. So firstly, I'd just like to say a big thank you to everyone who joined us on the webinar today. Also a thank you to Chris and Brian for the information that was provided. I just want to reiterate that this presentation is not a recommendation to purchase or an invitation to trade, and Westpac does not receive any income directly from Deutsche or Chi-X with regards to traces. I hope you found the information valuable. I also invite you to look out for future webinars we'll be running. We'll be looking at things such as ETFs, such as trading through Trader Pro, which is our advanced trading tool, and also an economic update from one of our Westpac senior economists. So from everyone at Westpac, Deutsche and Chi-X, thank you very much for your time today.